I like to get to know you guys a little. So Bruce and Paul retired. William, 5 years retired. Ed, retired but working side hustles. Robert's been retired. Uh, again, it comes up as investor success. 2 years from retirement. Kevin's a retired doctor there. 70. Raymond, 76 and not retired. That's great. Well, it's good if that's what you want to do. If you're doing something you love, fantastic. So a lot of folks are retired. 7 years retired for Rich. All right, 23 years retired for Richard. All right, well, that's fantastic. So a lot of the folks who are here and the room continues to fill up are already in retirement, so that's good. I think you guys are in the right place. Like I said, we're gonna get officially started here. Let me just take a quick sip of water here, and then we're gonna get going. Okay, let's go ahead and get officially started with today's webcast. Welcome to today's webinar titled The 3 Most Effective Strategies for Managing Your Retirement Portfolio. My name is Jim Penna. I'm the manager of retirement services here at VectorVest, and I'm really excited about this presentation. I hope you are as well. In fact, I'm going to start off here with some very, very lofty goals. This is my promise to you today. In this webinar, you're going to see how it's possible that you can build your wealth, transform your legacy, and live financially free. I know there's some lofty goals there, but I believe we can reach that. I'm going to show you how you can do that. First, a little about myself. Again, Jim Penna is my name, manager of retirement services. I've been with VectorVest for about 16 years now. And it's been a great journey. I came down, as I mentioned earlier, I'm from Connecticut. I moved down here just about 20 years ago because I got tired of shoveling snow. Just to give you a little of my background, I have been in the securities industry for, just over 30 years now. I took my Series 7 exam back in 1992. Working for a brokerage firm. I was a broker for about 15 minutes because I wasn't, back then in the 90s, you were making, the boiler room cold calls, and it just wasn't for me. But I did get a job in that same firm on the trading desk, and then ended up working for a larger market making firm in New York right before I decided to move. My boys were young enough to uproot them and take them down here to some warmer weather. So that's my background here. 1992, taking the Series 7 exam, it's amazing how the market has changed, how market philosophy has changed, how my outlook on the market has changed since coming to VectorVest and watching the changes over the years. So hopefully I can share that with you today. I look forward to that. We are going to walk through our journey, why we're here. The first thing I'm going to do is talk about the VectorVest model, what we call the 3 Ps of retirement investing, right? Okay. We believe that every investor should know these, especially those with retirement-minded portfolios that they're building and managing. I'm going to talk briefly about the 7 signs that perhaps your portfolio is not quite ready for retirement, or even if you're in retirement, we're going to try to make that better for you. Then I'm going to get into those 3 core strategies, right? Those 3 important factors that we need to be able to build and manage our portfolio. Number 1 is how to protect your assets. You're going to hear me say several times today, to me, the most important thing that you can do with your retirement nest egg, your net worth, is protect it. That's first and foremost. Okay, so we're going to talk about that. I'm going to also talk about growing your portfolio. Okay, one of the P's is going to talk about profiting. We'll discuss that. And then finally, a very important part of our retirement strategies and our way of going about the process is to be able to generate income. Right, I'm going to show you my favorite way you can generate income, which is good whether you're retired or not. Okay, there's actually a couple of different ways that we like to generate income, and we'll talk about that. And then at the end, we're going to go ahead and open it up to a live Q&A. I'm joined by my friends and colleagues. John's not here. Mr. Brian D'Amico is with us. He'll be answering questions in the background. as we go through, because at the end we're going to do a live Q&A. So if you have questions that pertain to something maybe that that I'm talking about, go ahead and type them in. Brian will help you out. I'm going to go answer the questions, as many as I can at the end, so that I can get through the presentation. Okay. And if you like what you learn here and you want to work with me and our team further, I'll tell you at the end how you can do that as well. Okay. Now, one thing I didn't tell you about my background is that in Connecticut, before I got into the securities industry, I was a police officer for the better part of a decade in Norwalk, Connecticut. And so if at any point it sounds like I'm, telling you what to do, that's where it comes from. Okay. Sometimes, it's a long time ago that I left, but it's where I grew up. It's what I learned most of my life's lessons at. So if it sounds like I'm telling you what to do, that's where it comes from. And I say that on this slide because I'm kind of telling you, turn off all the distractions. I know you're not going to shut your cell phone off. Put it on vibrate, at least put it off in the corner, shut the door, try not to multitask, right? I don't want you to miss something that's important, that could be important for your future. So stay focused, and we'll get through it together. All right, with that, if you guys are ready to go, type in yes, because I am. Let's talk about our retirement portfolios. After decades of working with retirees here at VectorVest, my 16 years and longer than that, VectorVest has been around close to 30 years now, we have found that the retirement investing model that most people have or that they live by is broken. Okay. We believe it's broken, but we also believe that with a couple of minor tweaks, we can fix it for you, right? You can get that fixed so that your retirement will be on much more solid footing. And that's our goal here today. Okay. That is what my goal here today is. So I said our journey would take us through the VectorVest 3Ps investing model. And here, what we have proven to work is what we call, again, the 3Ps. Hopefully you have a piece of paper, a pen. You can take some notes and draw this out with me. But these are the 3 core pillars that you need in your retirement process, in your retirement plan. And the 3Ps are profit, provide, and preserve. Okay, profit, provide, and preserve. What do we mean by each? The first, when you think of profit, when we talk about that here, think of the word growth or capital appreciation. We're going to talk about the assets that you allocate to the equity markets that your objective is actually growth and capital appreciation. Okay. Profit is a plan to grow your portfolio safely and steadily year over year. Next, we're going to talk about provide. And when I talk about providing, think of it as providing income. It's simply a system to generate a safe, steady income. Here's where you would allocate another portion of your retirement net worth towards this specific goal. Finally, there is preserve, right? Protect. I joke that, I took the oath a long, long time ago to protect and serve. And I kind of carry that oath over here with me when it comes to conveying to you how important it is to protect your portfolio. So think of it as capital preservation when we talk about protecting your assets, okay? So that's going to be an important factor that we go through here today as well. Now, when you do all 3 of these things, okay, that's when you can meet those goals that I talked about earlier, right? Financial freedom, ultimately, peace of mind in retirement. That's really our goal. What I want to do before we get going is I want to just take a minute or two and talk about the 7 signs that your portfolio may not be ready for retirement or may not be working best for you as you approach or you're in retirement. I'm going to go through these fairly quickly just to lay the foundation here for us. The first one is that there are a lot of people out there, and again, take notes here. Let me know if any of these apply to you. I'm going to ask you at the end of this. Most people look to Social Security to provide the income needed to retire, and some to retire happily, right? But there's a problem. There's a lot of problems with that, right? Recent survey I read said that 60% of non-retired workers feel Social Security won't even be around when they retire. I don't know if that's true or not, but if that's what the workforce feels, that's not a good start here. Even if it is still around, okay, if you go to the Social Security website itself, okay, right on their own website, they will tell you that Social Security was never intended to be someone's sole source of retirement income. Okay, they tell you that. The average security benefit right now is about $1,700 a month, and that's before Medicare premiums are deducted. So on average, you're left with, close to 17 grand a year, roughly. But that's probably not going to be enough to live the retirement that you had planned for. So that's one. Another one is a lot of people will just get worried about that and save their money, which, by the way, in and of itself is a good thing, right? Being prudent and saving your money, of course, is a good thing. However, if you simply take your hard-earned money and put it under the mattress, all right, and just kind of count it through the piggy bank, right, you're defeating the purpose there. Inflation is going to destroy the value of your savings. Interest rates are higher now, so there are better places, right, than a shoebox in your closet to save your money. Okay. But you don't want to take it too far where you say, you know what, I don't need any returns on my money. I'll just let it sit there. So that's not a good sign. Also, a bad sign for you in retirement is that, or as you approach retirement, is that you just set and forget, right, your portfolio. You don't really manage it. You don't look at it. A lot of people will put money into, mutual funds in their IRA or 401k and just kind of hope for the best. Unfortunately, when the market drops and wipes out, a third or 40%, whatever, of your portfolio, many people end up delaying retirement or possibly having to go back to work, right? That's not a good thing either. And then there's the old lottery tickets, right? When all else fails, you can play the lottery. I remember, you guys remember the commercial, $1 in a dream is all it takes. Well, if that $1 turns into 2 and then 10 and 50 and a couple of hundred a month on the lottery dream, please know that that's not really a good retirement plan. Okay. All right. Now, I will admit, I was joking earlier with a colleague. The Mega Millions was at 1.5 billion, and I bought 2 tickets, and I actually hit the Mega Million number and one other number, so I won $4, but I got my investment back. One of the other things that you may be considering if things aren't going right is paying someone else to make the decisions for you. Now, please understand, I'm not trying to say that financial advisors are bad or they don't know what they're doing. That's just not true in most cases. They can definitely help in certain areas of allocating your assets and planning for you. However, we are saying that when it comes to your investments, right, at a minimum, you need to be knowledgeable enough to, at the very least, oversee what they're doing. You have to be able to look over their shoulder and say, hey, why are you doing that? Or I don't think that's really what I want to do. That kind of thing. You have to work with them as opposed to them just making your decisions. If not, you could be like our subscriber, Rob here, retired back in 2005. So it's going back a ways. When the financial crisis hit in late 2007, and his advisor told him, just write it out. Don't worry, basically. And by 2008, his portfolio, as he let us know, was down 40%. Plans were in ruins. We were in total despair. Looked like I'd have to go back to work. Okay. Perhaps not as dramatic as the drop in Rob's portfolio, but Carol also let us know. She describes another typical result. She hired an advisor in 2013 to help manage her inheritance after her dad had passed. And she said by 2017, she finally had the time to take an in-depth look what the broker was doing. And again, these are her words. I was shocked. It was a mishmash, cookie cutter funds after their fees. The net result was 1% annualized rate of return during a time when the market did much better. Okay, so we don't want that happening to you. Another sign is that you're cutting back on your spending because you're worried you'll run out of money. Again, being frugal, being smart with your money is not a bad thing. But if you're doing it because you're afraid, you're not going to be able to pay the electric bill, then we know it's an issue. And then finally, if you decided to work longer than you originally intended, right, it means that your portfolio is probably not ready for retirement. Again, nothing wrong with working. You want to keep working. You're doing something you enjoy, and you want to, still get out there and work. That's wonderful, but it's got to be because you want to. So, do me a favor. Hopefully, like I said, you have a pen, pencil. Write them down. This is the retirement unreadiness checklist. Right? Let me know if any of these 7 items, in some form or fashion, you might check off on this checklist. If you do, type in either 1 of 7, 2 of 7, 4 of 7, 5 of 7, whatever it might be. And let me know of these 7 things, or any of these things to any degree, part of why you're here today. Richard said 5. Yeah. Paul says 2 of 7. Michael says 5 and 6 are issues for him. Ed says 1 of 7. So, okay, yeah. Usually a lot of 0 of 7s will come in, but so far no zeros. So just so you guys know, throughout the webcast, I'm going to ask you to interact with me to keep working with me here. So, okay, yeah. 1 of 7. All right, yeah. So listen, these again, maybe not exactly the way I portrayed them, but there are a lot of reasons why you may not feel ready for your retirement, or you're not where you want to be. If you're exhibiting those signs, it really is an indication at the end of the day that you need to take control, or at least more control over what you can control. We all know that we can't control everything, but there are things in whatever facet of life that you can. So the strategies we're going to talk about will give you the techniques to both manage your own money, as well as give you information that you need to watch over someone if you're paying someone else to do it. Okay. All right. Let's jump into the 3 Ps here. Right. Because now that you've decided you're ready to take control, let's walk through these. The first one, starting in the lower right corner here with preserve. One of the reasons I start here is because, as I said earlier, it is to me the most important factor in building and managing your portfolio. I believe that people like Warren Buffett, Ray Dalio, the great hedge fund manager, right? Ray Dalio said it's really no good growing your portfolio if you don't know how to protect it once you're growing it. Okay, so protecting your assets is very important. It's like driving a car. The first thing you do when you get in the car is what? Hopefully, it's not turn your cell phone on, but hopefully it's buckle your seatbelt, right? It's like on an airplane. You can't take off till everybody's seatbelt's fastened. So instead of worrying about the market falling and wiping away a chunk of your nest egg, what you need to have in place is the strategic defense system we're going to talk about to protect your assets, right? I always liken it to the old Reagan years, the Star Wars, whatever it was called, the Strategic Defense Initiative. That's what we're talking about here. Because what happens, a lot of people get caught by surprise when the market drops. After it happens, you hear people on TV and advisors talk about what you should do, now, after the market falls, to try and make your money back, right? They're always there after the fact. This has been especially true right up through most of, all of 2022, late 21. And while 2023 has been a little bit better, we're still seeing, some headwinds that we have to be prepared for. Okay. So instead of worrying about that, you need to know how and when to insure your portfolio. Remember, that's what we're talking about here, insurance. You insure your car, your home, your health, okay, your life. And I laugh at my wife and I, our dogs are insured. We have insurance policies on our dogs. So why wouldn't you be prepared to insure your net worth, your retirement nest egg? What I want to do is talk a little bit about knowing when to protect your portfolio. That's the key, right? You have to know when to do it. What I have here is a market timing graph from the VectorVest program that we have a long footprint, long historical footprint. This particular graph goes all the way back to 1999. Do me a favor, type in the chat box. Have you ever bought or owned a really good stock and watched it drop when the market fell? If so, type yes in the chat box. I know the answer. I know that everyone in this room, if you've ever invested, has had that done. Right? Ed says, of course. William says, yeah. Right? A lot of, okay, they come in fast here. A lot of folks, Richard, Peter, Dan, Chad. Yeah. Yeah, I have too. I do it less than I used to, but we've all been there. What I want to do is zoom in on a few of the biggest market moves that hurt a lot of folks over this time frame, and just kind of a little quick review of history, and to show you how important it is to recognize these market conditions. Because here at first, I'm going to guess there are people in the room today who experienced the bursting of the dot-com bubble, right back in 2000. I was a market maker at the time, working on a trading desk. A lot of customers, a lot of individual investors lost a lot of money, but I can tell you what, a lot of traders made a lot of money. Well, we had an investor, a customer, client of ours, Lynn. He said that during the dot-com boom, I took 80 grand, increased it 5-6 times over. But in 2000, I proceeded to lose almost everything over the next 2 years. And as you can see, his words, he wasn't happy and he needed someone to blame. And that happens way too much, right? Way too much. You make money during the uptrend, and if you don't know how to protect it, you give it all back, and you spend years trying to get back, right? Here, if you had done that in 2000 and did nothing and just waited it out, it took you 6 years just to get your money back, right? Remember, y'all use the basic math, right? If you lose 50% of your portfolio now has to go up 100% just to make back what you lost. Right? Think about that. It happens way too much. You make money during the uptrend, but you don't know how to protect it. When the market turns against you, you give it all back, and you spend forever trying to get it back. Now, I'm going to fast forward to 2008 when the housing bubble burst. I know you guys remember that. The average mutual fund fell over 40%. Okay. Many people, like we talked about Robert earlier, talked about having to go back to work. He lost 40% of his portfolio because his advisor told him just write it out. Then during the COVID, now this was a much shorter sell-off, but the S&P 500 dropped over 34%. And I'm going to show you in a minute how even with that quick sell-off, how the VectorVest program would have saved you a lot of headaches and a lot of money. And then we see from November of 21 through 2022, we had what I still call a bear market. 2023 has tried to what I've been calling sort of rallies. Okay, but here in that time frame, the market went to a bear market, down 30%. The S&P 500. Let me ask a question based on all of this, right? If you had or have a financial advisor, did he or she call you leading up to any of these events that I just went through to warn you? Not to mention the other 50 times where you could have been on more prepared for the right side of the market. These are just the obvious ones, right? Marcel writes in, nope. William says no. Ed said no, but he's gone now. Right? Richard said the same thing. No, and I fired them. Michael says no, but I'm fee-based only. Gil says nah, not that I could recall. Right? Chances are they didn't. Right? As you guys are conveying here. Okay. Which brings us to today. Many are worried that the market will still continue to fall. Like I said, I know this is a market timing graph, doesn't quite go to current here, but 2023, the market has tried to rebound, but there's been still a lot of volatility and a lot of uncertainty. Now, some people say that you can't time the market, right? Oh, you can't time the market, people say. And the people who say it are right. They can't time the market because they don't know how. They don't really know what it means to time the market. Because the real truth is that you can't predict where the market's going to go. Right? no one here at VectorVest we don't predict where the market's going to go. But what we can do is analyze what is going on, recognize and follow the trends that are right in front of us. Right? Even though the markets on a daily basis have, they have ups and downs on a daily basis. But if you look at the big picture, you can clearly see major trends in the market. And within those major trends, you can also identify even shorter term trends, right? Within the longer term trends. All of this is important when it comes to growing and protecting your portfolio. But you don't hear this information from the talking heads on TV. Very rarely. There are a handful, but rarely they'll say, hey, it's time to get out. The market's in a downtrend. Very few folks will go on there and say that. Okay. So the point is, I want you to be careful where you get your information from. Let's take a quick look how to use the right information so you'll never be on the wrong side of the market for more than maybe a week or two. Okay. I'm not here to tell you that we can pinpoint intraday every single peak so that you'll be out. I'd be lying to you if I said I could do that. But I'm going to show you how the VectorVest program can recognize trends and the power of having that information to greatly increase your odds of being on the right side of the markets. Right? That's going to ensure that your portfolio will never collapse again. So you want to make sure you have a system that allows you to determine the market's direction. Some people use moving averages or other technical studies, perhaps on the S&P or the Dow, whatever it might be. I use the guidance from VectorVest, right? Because you need a system that's not emotional, that's based on empirical data and has a historical track record that you can go back on. Like I said, we have a very, very large footprint here. Let's take a look at a few of the major market moves we discussed earlier, and I'll show you the power of having the right information and knowing when to act. I'll start with the financial crisis, 2007, 2008. Back on November 2nd, just days off the market top. Okay. We said in our strategy section, a word to new subscribers, the confirmed down signal, that's a VectorVest proprietary signal. The confirmed down signal that we received yesterday could be the entree to a long bear market. Okay, that was on November 2nd, 2007. We went on to say, don't be deceived by the endless parade of experts who will appear on TV and other places telling you to buy stocks. This is not the time to buy stocks. Okay, right? What do you think? Would that guidance have helped you protect yourself? Just type in yes or no. What do you think if you had heard that on November 2nd, 2007, knowing what happened shortly after that? Yeah, right. I know the answer. I know you guys do. I just want you to interact with me. Let's move on. So let's look at the drop that happened in 2020. Now, this is a big one because, we didn't know what the pandemic was going to bring, especially to the markets. This was an all-time high on the VectorVest composite. It was also all-time highs, I think, on the S&P and other indexes. Days before the peak, we noticed within our program warning signals in our market indicators. Okay. In our strategy section on February the 14th, this was our Valentine's Day gift to you, right? We wrote in the strategy section that there was a bearish divergence. Okay, I don't have time to go into exactly what our indicators are saying. Just know we showed a bearish divergence that suggested that the downside risk outweighs upside potential. Downside risk outweighs upside potential. That was a couple of days before the market peaked. Okay. A week later, we said that prudent investors should not buy stocks at this time, and aggressive investors and traders should play the market with a bias to the downside. Okay. And then we said, if you've been following us, you'll know we started alerting our subscribers back in November of 2021 to stop buying stocks. And then again, each day of the next week, right? This is when this was an all-time high again on the composite and the other major indexes, I believe. Right before that bear market hit, prudent investors should not buy stocks. Okay. The 22nd, when we got the confirmed down call, Prudent investors should not buy stocks. Aggressive investors trade or play it to the downside. Okay. That's how important it is to know, right? I take that time because it's important to know when to be defensive. Now let's look at how to protect your entire account using what we call portfolio insurance. Okay, right? And Dean, you got it, right? Let's take a look. So I'm looking at, this is back in 2022. We're going to look at a few days within there. There was a confirmed down in April. And again, it's used as an example of understanding what your market trend is and responding to that. I'm going to zoom in on this period right here. This is the confirmed down in 2022. On April 19th, because I meet with our coaching clients in the retirement coaching group once a week, we got our confirmed down, and I waited until the 19th. And in a live account that we use in our coaching group, I went out and bought portfolio insurance in the form of an SPY put option. That way I could demonstrate click by click how to do it to my coaching clients. Now, buying a put is a very, very simple option trade that anyone can do with their broker. So if you're in the room right now and you're saying, oh my God, options, I can't do that. Don't. If you're building and managing your portfolio, you can do this. Okay, anyway, we bought a put on the SPY, which is an ETF, of course, that tracks the S&P 500. So basically what a put option does, for those who aren't familiar, if the S&P continues to fall, right, the put option would increase in value, offsetting some of the losses on the portfolio. Right, that's what a put option does. It increases in value when the value of the underlying asset falls. In this case, the SPY. It's an insurance policy. You have an asset, your portfolio. It gets damaged. The insurance policy helps to pay for the damage. That's all it is. In this case, for that portfolio that we used on April 19th, we bought a put option. Right? I was just illustrating. We bought one, could have bought two or three, or I just happened to buy one that day. $903 to insure the portfolio. In just a few days, the market really, these were big moves in the market. Hard, may not look like it right here, but these were big moves in the market. And a few days later, we closed the insurance for a profit of $1,200. Okay, in just a few days. Helped to mitigate the loss that we saw. Again, we don't know what's going to happen. We're still bearish. We take the profits and we put it towards our next insurance policy. This all happened throughout 2022. We bought another one. I paid $15.38 a share. So for $1,500, I insured my portfolio. Most of that was the profit from the previous one. Okay. This one lasted a little bit longer. The market kind of fluctuated a little bit, but on June 14th, it was sold. The insurance policy was cashed in for another $1,000. The market signals continued to tell us we need to be defensive. Bought another 2 SPY puts. These cost $2,200, I'll call it. 9/20 of 2022. Again, just 3 days later. Big moves in the market. Closed them up for over another 100% gain. Offsetting the damage to the assets that we have. And then finally, we did it one more time in October, and another $2,000 came in. Following the guidance in the VectorVest program and understanding one of the most basic put options is buying a put or buying a call, but in this case, buying a put, really helped us get through 2022 and mitigate a lot of drawdown. One of our clients, Elaine, wrote, no, this was a different time frame. This was, a lot of people forget, January of 2018. Elaine wrote, Jim, because of your teaching, I hedged my portfolio with puts on the SPY, saved a section of my portfolio. Again, the beauty of options is the leverage. Didn't cost much to insure his portfolio, and he held on to them. He didn't close them out as quickly as I did and had a really nice return. So that's how you use them to buy them and protect your portfolio. So if you have the knowledge and the benefit of understanding when, not only how to buy the put option, but when, right? How much would portfolio insurance have benefited you, whether it was through 2022, back any of the examples that I showed? Just what would it have benefited you? If you want to type in a quick yes or no. I usually buy them slightly at the money or slightly out of the money. Yeah, Paul says yes. William says yes. Ed says absolutely. Michael says I think so. Dan says yes as well. Thank you guys for typing in. But yeah, it certainly would. I did some. I'll tell you this. I did some today. I closed Russell 2000 puts. I closed SPY puts today. The market opened up very, very high. And I held on to them. The market hit the red, and they weren't trades. They were just there to protect retirement positions, and made over $2,000 literally today doing exactly this. Okay, so the next strategic shift that we talk about is that you need to go from worrying about what could happen to your portfolio and being unprepared when it happens to where you have that strategic defense system in place, which protects your hard-earned assets. Right? Protection is a very important part of your retirement investing model, and it is how you'll be able to build wealth, transform your legacy, and be financially free, as we talked about earlier. Okay. All right. Okay, let's keep moving. I'm going to go now to the second P, and we're going to shift gears and go to grow your portfolio, talking about profit, capital appreciation. Okay, because now that you have a strategic defense system in place, and once you're comfortable with that concept, you no longer have to be so worried or so conservative when investing. I'm not telling you to go be speculative and start trading like crazy with your retirement money, but you don't have to be so overly conservative either. Instead, you'll be able to take full advantage of the market upturns to grow your portfolio. All right, we want to fix what might have happened to you in the past, where a lot of folks will struggle. Buy a good stock, maybe it goes up for a little bit, but then stops, pulls back, and you begin to just spin your wheels. And we don't want that for you. We want some growth there. So our mantra at VectorVest is to buy safe stocks rising in price in a rising market. Doesn't get more straightforward than that. And we're going to talk a little bit about that. We look primarily at a stock safety, right? Because I'll use a baseball analogy that I'll use more of as we go through. Right? It's fun to hit a home run. You want to buy that, $2 stock and watch it go to 150. I know, right? But that's not a retirement plan, because what happens to most home run hitters when they don't hit a home run? I know I got to have some baseball fans in here. What happens especially in this day and age in the game, what happens when you don't hit the home run? Right. Paul's got it. Yeah. Brian's got it. Yeah. You strike out. Yeah. There it goes. Dan, Dean. Yeah. We can't afford to strike out in our retirement portfolio. We don't want that. Because what happens is when you're trying to hit the home run, you start investing against what your objectives and goals are, like someone that you're not, right? We don't want you to do that. So if you're not seeing the returns you want, the answer is not to go faster. It's not to become a reckless day trader, to try to earn money back if things aren't going your way, right? We use the idea here of, again, two boys, they're older now, but remember teaching them how to drive, right? If they were struggling, I didn't say, hey, just don't worry about it. Just slam on the gas pedal. Everything will be fine. Right? You don't tell your kids that when you're teaching them how to drive. You tell them to slow down. Right? And it begins with a quote from our founder and mentor, Dr. Bartolito, who's written and said many times, good portfolio management starts with buying the right stocks. So again, I'll use the sports analogy. I usually put the 1969 Mets up here, but think of any team, whatever your favorite team is. Think of the best players on the field, or on the court, or on the ice. Look at it that way. If good portfolio management starts with buying the right stocks, the analogy is, if I put the best players on the field, then my team will perform better. Okay? My team will perform better. Same idea with your portfolio. Put the best stocks into your portfolio, and the chances of better performance, of course, are going to be there. That's what we're talking about. All right. So stock safety, we have a checklist here. These are just some of the factors that go into the way that VectorVest analyzes for safe quality stocks. First, earnings consistency. Does the company make money quarter over quarter, year over year? How big is the company? Plays a part, even though just because a company's large doesn't mean it's safe, but we take that into account. We look at the volatility of the price movement over a period of time, right? Are there violent drawdowns, and is it very choppy stock? We look at things like debt to equity ratio. Does the company have the ability, if there's any headwinds, whether it's specific to that company or the overall market itself? Okay. Are they able to withstand those headwinds based on their current standing and their debt to equity ratio? How long has the company been around? And then dividend history. A good safe stock doesn't have to pay a dividend, but as Dr. D always said, if it does, there is no greater black eye for a company than to have to suspend or cut their dividend payouts. So it's very important. These are just some of the things that we look at when we talk about safety. What I want to do is just take a minute here, and I want to go into the VectorVest program and just very quickly show you a quick illustration of what we're talking about. Okay, I'm going to go into my program here. I'm going to go into my watch list viewer, and I have created here in my program a watch list. And this watch list is of stocks that you know, okay, very well-known companies, where you eat, where you shop, people you pay money to, what you drink, okay, where you spend your money. You're familiar, I'm sure, if you're here, you're familiar with every company. There's 40 of them. I know you've paid money to most of these companies over the years. Now, we put these together just to give you, just to give you an idea. Sorry about that. There we go. Just to give you an idea of the power of what we call relative safety in the VectorVest program. Relative safety in the VectorVest program is defined as the consistency and predictability of financial performance. Okay. As manager of retirement services, everything I do is built around relative safety. Now, these stocks here, they're not randomly in order here. They're sorted by our flagship indicator called the Value Safety Timing Indicator. Okay. Now, what I'm going to do is I'm going to change the date here on this list. Again, this is meant just to be a very quick illustration of what we can do here. So I'm going to go back to, let's go back, and I'm going to run this list here. I'm trying to get through a period of time that saw both good and bad markets, just so you get an idea. Now, the beauty of what we can do here is I can sort this list any way I want to. I can click on any of these headers. The default sort is by VST. What I'm going to do first is click the RS button. Actually, I'm going to click it twice. So over a period of time, I want to illustrate how the worst ranked relative safety stocks have performed over a period of time, right? And if I quick test the top 10, what we're going to see are these top 10 stocks, even though they're very good, well-known stocks, over this period of time that I chose, again, up and down markets, only up 4% versus the S&P 500, which was up 20%. Okay. Okay, so that's that quick test. Let me go back, click the RS tab again. Now I'm going to run that same test over the same time frame. And what just happened is now we're, without any money management, we're now matching the S&P 500. Okay. Just a quick vision of the power of relative safety right there. Now, why would I stick to just 40 stocks just because I know their names? I'm not going to do that either. So what I'll do is I'll come up to what we call our stock viewer page. Okay. And in our stock viewer page, I can do the same thing. I can go back and test not just 40 stocks, but in that same time frame, I can look at that time we were tracking 7,300 stocks. What if I sort 7,300 stocks by the highest relative safety number there, and then I quick test those stocks? Again, without any money management involved here. Now we are significantly outpacing the S&P 500. So imagine when you start to manage the portfolio, what that can bring for you. So again, just a very quick illustration. I just like to show exactly what we can accomplish when we buy the right stocks. And of course, it has to be at the right time, right? We still take market timing and market trends into place. Okay, so that's my little show you how to do that. Right. So in some of our portfolios, we were able to, over a 3 to 5 year period. Now, 2022, of course, was a tough year, but we have our portfolios that are averaging over 23, 24% annualized rate of return. You can type in, I know the answer to this, but how would that affect your retirement? And again, I'm just on the growth part so far. That would be pretty good for your retirement portfolio, I think. Okay. So our next shift that we need to make is to go from slow and stagnant growth to where you have a solid growth portfolio strategy that has you buying good, safe stocks at the right time so that you can steadily grow your portfolio. Okay, very important part of meeting those goals that we talked about earlier. Which brings me to the third P, is provide. Okay, providing income. You don't want to rely on the pension, Social Security to carry you through retirement. So in order to live the lifestyle in retirement that you want, right, for that peace of mind, means that you have to be able to open up some new income streams. Okay. Now there's two ways that I'm going to talk about doing that. Okay, opening up income streams, right? You see it's plural. Let's start with getting paid with dividends, right? One of the benefits in focusing on safe stocks is typically they pay a nice dividend to shareholders. You want to be able to capitalize on that. Now, I know everyone knows about dividends, right? They understand what it is, company earnings that they pay out to their shareholders. However, finding the best dividend paying companies for a lot of people isn't as easy as it might sound. Okay. It's not easy to do. And one of the mistakes a lot of folks will make is simply, you can Google good dividend stocks, 71 million results in a second, less than half a second. Okay. You'll get a lot of articles, different sources talking about dividend stocks. But they're not giving you any of the information on the underlying stocks. Are they quality companies? Are they able to continue to pay and grow that dividend? Oftentimes what you'll get when you come to sites like this are the dividend stocks they consider best simply because they're the highest yielding stocks. And that's one of the big mistakes a lot of investors make, is they chase the high yield. You don't want to do that because there could be a reason there's a stock is a high yielder. And one, it might be a REIT or a MLP, a limited partnership. They're compelled to pay out most of their earnings in dividends. And so that's kind of an exception. But a high dividend yield, okay, remember, it's an inverse relationship with the price of the underlying stock. So you have to be careful that high yield isn't because the stock is crashing, because it's a terrible underlying company there. Okay, so that's a very important thing you have to understand about this. So what I have here is a screenshot in the VectorVest program, and I just have it set to one of our pre-built searches. It's called DRIP 25 Plus, and I just kind of skip right to this one. DRIP stands for Dividend Reinvestment Plan. Right, the power of reinvesting your dividends is very important in providing that income for you and that growth. Okay, these stocks have not only paid, but have grown their dividend every year for at least 25 years. Okay, and again, they're not just in a random order here. They're sorted by the value, safety, timing indicator. One of that I owned and used as a graph here that's on this list is Grainger, retail building products. It's their industry. And again, we can go back a long time. This is 1997, right? This is the type of picture you want in your dividend growth portfolio. Right down below are the dividend payouts. You can see year over year over year, they just continue to grow. And then you have the price of the stock moving in that same northeasterly direction, which is what we want to see. These are the type of stocks, capital appreciation and dividend payout coming to you, right? We have a portfolio that uses a strategy for what we call blue chip dividend payers. It started back in 2013. We've been managing it since. It averages, when you include dividends, about 18% per year, right? And that doesn't include reinvesting the dividends. So you could take that number up a notch. If you don't have to reinvest them, you can pull them out to use whatever you want for them. But when you reinvest them, if you have the ability to do that, it's really a very, very powerful tool. Okay. All right. Okay, so that's what we're looking at here in the portfolios. This is a screenshot just of the equity curve of this particular portfolio just into 2023. Again, about 18%. Now this picture here is all, that's the pandemic sell-off there. This is all just capital appreciation, by the way. Again, this doesn't include the dividend payout. Okay, so you have to keep that in mind. And so an 18% annualized rate of return over a 10-year span, in what I call admiringly the most boring portfolio there is to manage, is pretty darn good. And if there's anyone out there who thinks that 18% in a dividend paying portfolio, and the process we use with the blue chip dividend payers pays out some nice dividends, if you don't think 18% is enough, you're going to have to give me a call. We got to talk about that one. All right. Okay. So that's the first stream of income is understanding how to build and manage dividend portfolio. Next, we're going to talk about the second stream. Okay. And we liken it to collecting rent from stocks that you own. It's kind of a age-old terminology for what we're going to talk about, and that is covered calls. Covered calls is one of the safest, easiest option income trades that are available to you. Okay. And I like to comment that it's so safe that when I took my Series 7 back 112 years ago, the only option trade you could do in an IRA account was to sell covered calls. Why? Because selling covered calls against stocks you own, or if you buy it and sell it simultaneously, it adds no risk to your position. The risk is already inherent in the fact that you own the stock. Selling calls against it, all it does is pay you, gets you paid, and lowers your cost basis. It's an excellent way to generate some income in your portfolios. Let's take a quick look at how covered calls work here. So this example, all right, it's just a stock, ABC stock for now. It stock's at $47 per share. Okay, maybe I just bought it, or maybe I own it there at that price. It's trading right around that same price, right? So you got to be long at least 100 shares to be able to sell one covered call. So if you're long 200 shares, you can sell 2 covered calls, right? In this particular example, okay, and for those who may be new to covered calls, let me just give you the most straightforward definition there is. What is a covered call? Well, it means you're the seller. You're selling someone else the right to take your stock away from you at a higher price at a later date. Someone's willing to pay you money today to do that. Okay. So in this case, and just so you know, this was an actual trade on a stock that we did, EQT, owned the stock at 47, went out and sold someone the right to take away our stock at $49. They paid us $2.27 per share, or $227 to do that. Okay, that money's mine. Now, how much of it I get to keep depends on what happens during the life of the trade, but that money, when you sell a call, is yours. Okay. it also just lowered my cost basis from 47 down to 44.73. Am I doing the math right? So now I really own the stock at 44.73. So when we look at what could happen theoretically at expiration, the profits from the call that I sold builds in a stop, or not really a stop, but a cushion, right? I own the stock now down at 44.73. You'd still have a stop criteria in place for your stock because you do still own the stock, so that the stock can continue to fall. You have to have risk management in for that as well. But you do have a cushion. That's why it's a great trade and allows you to make money even if the stock goes down a bit. Now, what if the stock goes sideways? That's fine as well. You get to keep at expiration if it's still below 49 in this particular case. You keep the stock, you keep the $227, and if you choose to, you can hold on to the stock and sell another covered call and lower the cost basis even more. And then finally, of course, the stock could go up, and that's great. If it's called away, if the stock goes to, wherever it goes, and it's called being assigned, they take your stock away at $49. That's $2 of capital appreciation plus $2.27 in premium. That's a 7 or 8% return, actually even more on that one. It's about a 10% return on your investment in a month. In this case, for this live trade that we did in our coaching group, the stock went up slightly. It didn't take off, didn't crash for sure. We ended up closing the trade and capturing $300 of income in less than 1 month. That's just one trade in the portfolio that we did. Okay, so I just wanted to share that with you. One of our students in the course, Jerry, he had contacted us and told us that he had gone, these are his words, from hit or miss with no methodology to consistent monthly income. He's making over 2% extra each month just doing some basic covered call option trading. Okay, so it does work. What would that extra income allow you to do? Would it be helpful? When I asked this question, I remember an old colleague told me one day he's in his home, and he's in his home office or wherever he was, downstairs, whatever, and he heard his wife yell from the other room, and she yelled, "Hey, get on that computer and sell some covered calls. The refrigerator just went out." Right? That's what that extra income can do, right? He went and sold some covered calls, took in the premium. Anyway, went and bought his wife bought himself a new refrigerator. So that's what that can do for you. So again, when you implement the provide piece to your retirement investing model, you'll be able to shift from not having enough income to where you have a steady flow of consistent income, which will allow you to continue living the lifestyle that you desire in your retirement, right? And again, it's all about the peace of mind. That's our ultimate goal, is having that peace of mind in retirement so that you can be financially free. Okay, so I believe you showed up today for a few reasons. I think there's some reasoning behind why you took the time to spend with me today. Perhaps because of a lot of that's going on in the market, your portfolio maybe has pulled back. You're not prepared or not sure what happens next. Maybe you don't have enough income to replace the check you were getting if you just entered into retirement. Okay, that's not uncommon. You fear, as we said earlier, that you may have to scale back your spending, and you certainly don't want to rely on others. And maybe you're doing okay right now, but you know that you're still not quite where you want to be. And the hard part about that is if you don't have a plan to get there. Okay. So today, what I'm hoping is that you learn that it's possible to take control of your retirement when you have a clear plan, a process, and a technique. Okay. You don't need to be worried about a market collapse when you have a strategic defense system. Hopefully, I was able to convey that today. I hope that you learn that you can steadily grow, have growth in your portfolio by using market trends, market timing, and buying the right stocks at the right time for that steady growth in your portfolio. And then finally, how you can generate consistent income, whether it's just the dividends. Listen, if you don't feel like doing the covered calls, you're not comfortable, Build a good quality blue chip dividend paying portfolio. You'll get both capital appreciation and a steady stream of dividends. I would urge you to at least try to incorporate the covered calls as well, because it's a great way to generate income. Right. The main thing I hope that you learned today, and listen, it's an hour. There's a lot of information. I tried to share as much as I can, but the main thing I hope you learned is that the secret to build wealth, transform your legacy, and to live financially free, right, is to make sure your retirement investing model includes, in some form or fashion, the VectorVest 3 Ps of profit, provide, and preserve. Okay. So that brings us to the obvious question that you should be asking yourself right now. How do I create this type of system in my retirement portfolio? How do I do that right now? Well, you have a choice. I believe you have a choice anyway. You can choose to do absolutely nothing and keep getting the results that you're getting. Same old thinking, same old results. My fear is that you'll be in the exact same place this time next year, worrying if you'll have enough money when you retire. You can do it alone, maybe put together some of the ideas that we touched on today, kind of learn by trial and error. But as our struggling carpenter here knows, that mistakes can be very costly. Or you can choose to do what Jerry did and what thousands of others have done, and that is to get right to the solution. Right? Why do all this work on your own when there's training available that allows you to bypass all that trial and error, and it gets you to success much quicker? Right? We want to get right to the solution. So instead of taking the long way to where you want to be, take the shortcut, right? Right? This shortcut, right? A joke. This is the road less traveled, unfortunately, when it comes to this stuff. Right? You don't want to be on this path. I want to give you the plan that if you and I were to work together for 5 weeks, literally you and me in a room every week for the next 5 weeks, here's what I would get you to do. Okay. It's a simple plan called the Retirement Portfolio Transformation. It's a step-by-step roadmap to a secure retirement. Okay. Before I get into that, however, what I want to just point out, Albert Einstein said that everything should be made as simple as possible, but not simpler. So it's important for me that you understand that this is not a get rich quick scheme. It's not what it's meant to be. It's not some magic pill where you expect results in the next, 24 to 48 hours, doubling your portfolio. It's a serious process, requires some effort on your part to do. Right? So you would definitely have to commit to it. So you have to keep that in mind. It's for serious people who take their retirement seriously and who are willing to put in the time and effort to learn the system that we have developed. But that's why VectorVest was created and why we put together this retirement portfolio transformation course for you. Okay. By transforming your portfolio, we believe that you'll be able to reach those goals we talked about earlier, building wealth for you and your family, transforming your legacy, creating a better life for your kids, for your grandkids, and having that financial freedom. Again, it's Retirement Portfolio Transformation, a step-by-step roadmap to a secure retirement. It's pretty basic. When I lay it out, the easiest way for me to explain the course is to map it out for you. So do me a favor, give me 2 minutes. Stay with me 2 minutes. Let me explain to you the modules that we walk through. We'll start with module 1, right? And you see they all coincide with our 3 Ps here. The course will get you through those. Number 1, module 1, will build a strong foundation for your retirement. This is where you'll get clear, right, to yourself. You have to set your goals and your objectives. There's a great saying that applies here, and it says, remember, a goal without a plan is just a wish. And wishing and hoping is not your retirement plan. Right? You have to have a goal, but you have to have a plan to get there. We're going to talk about investing as a business, the acronym, the SMART goals. Some of you may be familiar. We'll talk about how to apply them. creating a vision statement, understanding what you're looking to accomplish. Everybody's different. Everybody's in a different place, different portfolio sizes, different objectives. Module 1 will fix that for you. Module 2, you'll learn how to increase your capital with a safe growth portfolio, identifying the right stocks, finding the best candidates, and more importantly, how to manage them, right? Finding good stocks, quite honestly, is kind of easy, especially in the VectorVest program. But once you own the stock, you got to know how to manage them once they're in your portfolio. Otherwise, you know, it's not going to work out the way you want to. Okay. Module 3, we're going to do the same thing, but we're going to do it. We'll shift gears and talk about the dividend growth portfolio, identifying quality dividend stocks, what goes into a quality dividend stock, how we manage that portfolio. Okay. You know, we'll talk about allocating your assets to these different portfolios. It may not be an equal allocation to each one, right? If you're deeper into retirement, I would personally say that you might want to put more money into a dividend growth and maybe not quite as much into a safe growth portfolio. If you're younger and earlier or just heading into retirement, perhaps the opposite might be true. Just all things to consider. And then in Module 4, we'll complete the provide transformation by teaching you 2 of our go-to option income trades. Now, I didn't talk about selling put options here today, but that's one we do touch on in the course, but we focus a lot, again, on the covered call, the safest, easiest, most basic way to generate income in your portfolio. Okay. So please understand this, even if you've never traded options, you will, at the end of this course, understand 2 things: how to sell covered calls and sell put options. And then finally, in Module 5, as I've been saying, is that the portfolio insurance comes in and we'll be buying protective puts. You'll know when to be defensive, how to protect not only your overall portfolio, but individual stocks as well, how to place those insurance policies on. Okay. All of this, and I'm going to be straightforward here, all of this becomes almost, I don't want to overstate it, useless if you don't know what to do. Once you've done this right and your portfolio is growing, if you're not prepared and don't know what to do, which we learned in 2022, which we've learned on occasions in 2023, right? So preserving your assets is really of the utmost importance. Okay. That's the course. Very quickly, the portfolio transformation. Now, the value of everything I'm talking about here is about $3,000. All right, we're not going to. You're going to get a much better deal than that. We have a couple of bonuses that go along if you sign up for the course here while you're with us. Bonus number 1 is we have 5 live mastery support sessions in the university. See, what we do is we archive the actual modules in the VectorVest University. You sign up today, you get instant access to those. With that, and I'll give the dates and the calendar for this in a moment, but we have weekly 5 live mastery support sessions where you can ask questions and we apply what we learned in module 1 in live mastery session 1. We'll apply what we learned and answer any and all questions as to that. Bonus module number 2, every Tuesday at 2 p.m. Eastern time, I meet with our members only retirement coaching group. We record that and archive it. We're going to put that recording into the resources in the university for you to follow as well. And then one bonus on here that's not on here. If you're not a VectorVest subscriber currently, we're going to give you 60 days of the VectorVest program so that you can work with the program and through the modules and through the mastery sessions with us. Okay. So you'll get 60 days of VectorVest along with this. That's not up here, but that's something that you get as well. Okay. Now, we have an early bird special, $5.95. It's good through this coming Monday at 5 p.m. if you're interested. But because you guys were kind enough to spend the last hour with me, if you order before the end of the webinar, and I'm going to ask Brian in a few minutes to come in and make sure I didn't miss any questions, or we can answer any questions, comments, concerns that you have. But because you were here today, we're going to knock another $100 off. So for just $4.95, you're going to get access to the course, the modules, the mastery sessions, the slides, the checklists, help videos that are going to help you walk through this. Okay. You'll have access to that for 1 full year. Brian was kind enough to put in the chat box the vectorvest.com/transform. Okay. If you click there now, it'll take you to the registration page. So you can go ahead and do that. In fact, I'll go ahead and click on it real quick here. Thank you, Brian, for putting that in. And we'll bring up, this is what you'll see when you click on that link, www.vectorvest.com/transform. It'll bring you here. That special price shows up here. You can scroll down and read through everything that I talked about here, what we're going to be doing, and then simply click Purchase Course Now. Okay. So remember, you have access to this, these resources for a full year. Okay. And again, we record all the live sessions. So if you're not a VectorVest subscriber, just go ahead and put in your information here. If you're already a VectorVest subscriber, just click sign in and put in your username and password, and it'll take you to where you need to be. So if you're not a subscriber, fill this in, hit submit, and we'll get you that trial period for the life of the course. And again, you'll still have access to the course resources for a full year. Okay. Before I go any further, understand this. Here's how confident we are in this course. After the course is over, if you show you've done the work, you got to come to classes, watch the recordings at least. And if you're still not satisfied, VectorVest, will gladly give you a refund, a 100% money-back guarantee. They say there's no such thing as a risk-free trade. Well, this is a risk-free trade for you. Come to the course, go through the material. It's not for you, we'll give you your money back. That's how confident we are you'll prosper from taking the course. There's an old saying, it's the best time to plant an oak tree is 20 years ago so that you can be sitting under it now enjoying the shade. What's the next best day? What's the second best day to plant the oak tree? Right, today. Yeah. It's never too late to begin your retirement planning, even if you're in retirement. Now, here's another question you got to ask yourself. How much is it costing you not to do this? How much did it cost you if you were investing back in 2000, 2008, 2018 that I didn't show, but I mentioned earlier, 2020, 21, 22? How much money did it cost you? If that number is more than $495, let's fix things once and for all. Let's make it so you never have to experience 2008 over again, 2020, 2008, whatever, there's a bunch in between those main ones. Let's make it so this is the year you begin to safely grow your retirement and generate income month after month, knowing how to protect and preserve it. So again, Brian's going to come in. He's going to help me with some Q&A. Order while we're still on here. Save that $100. Right? Remember our friend Rob here? He did, and he had some good results. He realized he couldn't rely on others. He started using VectorVest, and I'm just going through it quickly here. You can read through that. Recouped his losses from the financial crisis, and he's been relying on VectorVest ever since. 15, maybe 30 minutes a day he uses to manage his retirement portfolio. Right. Go to that website. Do me a favor. If you've gone to the website and you've signed in, do me a favor. Type in the chat box that you're in, that you were able to get there, and that the website worked properly for you. It's important for us to know. All right. And with that, I'm going to ask Brian, if he's here with me still, to come in. Brian, help me out. Make sure I didn't miss any questions.
Hey, Jim.
Hey, Brian.
All right. I'm glad you could hear me, though that part's working. All right. So the great presentation. We had we had both VectorVest members and non-VectorVest members here, and there's a lot of great feedback in the chat. Like Ed said, good presentation, great review of the VectorVest system. So thanks for sharing that. Dean says, great, thanks for the great info. So a lot of great information shared. And question about the course. First one, there's actually probably 2 or 3 about the schedule. So maybe touch on, if you can show the schedule, and because Ed's like, I'm going away for a few weeks and I'm going to be away for a month. He wants to know, is this done on any kind of schedule? And I was trying to tell him in the chat about the differences not the differences, but that about the recordings and how they're available immediately, and when the live sessions start and kind of what you cover in those live sessions. I know you touched on it earlier,
Yeah.
but can you help Ed and others who are asking about the schedule?
Yeah, definitely. So let me start here with the calendar here. So what it's going to be starting on August 21st, okay, we're going to have live mastery sessions at noon Eastern time. What is a mastery session? Well, let me go take a step backwards first. When you sign up for the course, you're going to receive an email from VectorVest giving you instructions how to access the course and all of the resources within the VectorVest University. In those resources are currently the 5 modules where we actually teach and walk through using the VectorVest program, not just the strategies, but the tactics, right? You can't have strategies without tactics to employ them. So that's where all that is found, in the modules. And they're available to you as soon as you sign up. Then, starting on August 21st at noon, we're going to have a live session. And basically the idea is not to reteach the module, but rather to implement what we learned first. And then secondly, of course, answer any and all questions relating to that module that we're conducting. Okay, now, a couple of things for Ed. Or for anyone who thinks, well, I can't make the live session. Every one of these live sessions is recorded, and later that afternoon, early evening, it's put into the course so that you can watch it later that day or that night or tomorrow, the next day, whatever. And you'll have access to that live module just later that day. The great thing about doing it that way and recording and archiving it is when you get your instructions, you'll also get a dedicated email bin where you can ask us questions. So we'll answer those questions via email, but also oftentimes if it's like a question I get a lot, or, we know we can help the entire class with, we'll actually answer the question during the live session, illustrate what we need to do, and then that will be in the recording for you. So the whole point of that is don't worry about missing the live session. It's going to be supplied for you. Now, the group coaching, by the way, so the one day though is Labor Day weekend. So we'll be moving just that one day to the Tuesday. And then the coaching groups, we meet every Tuesday at 2 p.m. Eastern time for our coaching group session. And we've been doing that since, I don't know how, Brian, it's got to be 6-7 years now. We've been doing it, something like that anyway. And what we're going to do is record those sessions and put them into the course for you. So you'll see, and I should have opened up the course. I'll try to do that and show you the resources when you sign up, exactly what you're going to receive. So I'm sorry, I should have had that open, but there we go. I'm going to open it right here for you. So when I say, when you go into the course resources, this is what I'm talking about. Okay. It begins with a welcome video. Then we have our modules. We did a little different in this iteration. There's several shorter videos instead of one big long video. Know when to buy, what to buy. We have their mastery session, treating it like a business. That's all module 1. And then right on down the line, you'll see we do have bonus modules at the end. We have our coaching group. Again, here you can go back. These were archived from the last launch, but we'll be putting the new ones in each week for you. You also have resources here, things such as all of the slides that we use in our presentations. We have some cheat sheets and spreadsheets that you can use, and all the different module resources here as well. So there's a lot that goes into the resources that you have right at your fingertips here. And that's where it'll look like when you get in.
All right, fantastic. Those of you who are joining, like Michael said, hey, I signed up too. And then he was like, I just logged into my university and I now see the course. He says, I'm looking forward to this.
Great.
So those of you who have signed up, like Michael, first, welcome to all of you. But if you signed up and you are already a VectorVest member, when you sign into the VectorVest University to access your course, like Jim was just showing you, just remember to log out of the course, log out of the university, and log back in to kind of refresh it so that it'll show you the course that you just purchased. And then we should see it in there. All right. Michael did have a follow-up question. He didn't say how many modules are covered each week.
Okay, yeah, good question, Michael. So again, remember now that you're signed up, when you go in there, as I just showed you, you have access to all 6 modules. You may be done with all 6 modules by the weekend. I don't know. But what we do, we only cover one module, okay, during the mastery sessions, right? Now, what will happen is if we get through the module and through the mastery session, I do open it up, and I know I steal the line from that guy on CNBC, but I call it the lightning round, right? I stay on as long as you guys have questions, but I don't start answering just random questions until I know we're through the module that we just, so mastery session 1 is for module 1. Mastery session 2 is for module 2. When I feel comfortable that all the questions and comments have been addressed, then we kind of open it up. But we do one module per week in the mastery session is the short answer.
All right. And Ed was, let me answer you, Ed. The things that are shown in green, at least for me, I know not everybody has the same color eyesight, but for me, it's green. The green ones on Monday, and then the one that is showing up on Tuesday. Those are Jim's mastery sessions. That's where he focuses on the course content specifically for students just like you. And then the blue ones, that's his coaching with all of his retirement clients. Those are people who probably have already taken the training in the course, and now they are implementing it on a weekly basis. Okay? All right. Next up, Jim. We had somebody who was talking about they were using Schwab, and they were saying that wanted to make sure that things like this were able to be done. I would assume, but they want to make sure it's done in their whatever retirement account that they've got, because they were afraid that a certain trade was not able to be done in their account.
No, yeah, that's a good question. If you're using Schwab, everything that we do in this course, you can do in Schwab. I have a Schwab account, Street Smart Edge, and through Schwab. I focus more on a lot of what you'll see me use is Thinkorswim or TD Ameritrade, which is actually now owned by Schwab. And as the weeks come, I keep getting notices sooner than later, Thinkorswim is going to merge in with Schwab. But everything we do, all of the mainstream brokers will allow you to do. That's a great question, but yeah, I mean, because again, all we're going to do is for the covered calls, it's again the lowest level of option, just like buying puts, option approval that you need. So you're fine with Schwab.
All right, fantastic. They don't need any I assume to do the covered call, they probably need to get options turned on or something, but they don't need high level options access.
Exactly. It's a very, very basic process with the mainstream brokers. You just fill out a couple of quick questions and online, and you'll be set up, and it's really easy to do. And yeah, the most basic level of what they call options approval is all you'll need here, because the only thing we're going to do is sell covered calls and potentially buy protective puts. Both very basic, both very easy to employ, and both, I think, I think you need them if you're managing your retirement portfolio. I believe it's something you need to do.
All right, fantastic. Well, if you can just slide back to I think it's the previous slide. I will just remind everybody about the $4.95 rate is good while we're live on today's session, maybe a few more minutes. And then it'll go to $5.95. The price will increase on Monday at 5 o'clock. And then registration will close Tuesday at 5 o'clock. And then registration's closed. You can't get in. And then the live sessions start on the calendar date that Jim was showing just a moment ago. So get in while, this is the best price that we've got. Now, I will say there is actually one price that's better, which is if you've taken this course before, let's say it's been over a year since you've taken it and you want to go through it all over again, it is like, I think it's 195 for you, but you have to give our team a call. I'll put our phone number in the chat for you. It's just 888-658-7638. And give our team a call and just say you'd like to get the refresher rate for the retirement portfolio transformation. They'll just verify that you've taken it before and get you all set up. All right. And all right, other than that, we just had a question to come in from Michael. I wanted to know, you mentioned earlier about selling puts, like selling a naked put. Is that something that's in this course as well?
Yeah, I saw Michael's question there. We are going to touch on selling put options as a way to generate income. And we're going to talk about selling covered calls. But those are the two trades that we're going to focus on. Ed,
All
not
right.
sure what issue you're having. Taking me to account page and not showing payment for the course. I'm not
Ed, I'd
sure.
recommend just give our team a call. We've got people on the phones ready to talk to you right now, and they'll probably just enter the order for you. Just give our team a call. It's hard for me and Jim, as you can imagine, being online like this. We can't kind of see what's going on. So if something weird is going on, just give our team a call, and there's people ready and willing to talk to you and walk you through it.
Definitely. Yeah, Ed, that's probably the best thing. Real quick to Michael, said, okay, no credit spreads then, I guess. Actually, Michael, I really didn't touch on it, but there is a bonus session where we will be talking about selling credit spreads. So there is actually a bonus session addressing that.
Now, Michael's actually taken our options paycheck experience course, so he's pretty familiar with them. So
definitely.
So we're not going to, you'll be set with what you've taken in that other course. So you're all set, Michael. Denise wanted to know a little bit more about your mastery sessions, Jim.
Mm-hmm.
I know a moment ago you were saying that you would stick around and answer whatever questions came in, but she just wants to know, she's like, hey, I'm sorry if I missed this, but how much time should I allow for each mastery session? Do I need to dedicate an hour? Do I need to dedicate 2 hours? What do I need to dedicate?
Yeah. Great question, Denise. Yeah. So the mastery sessions, I will say at least 1 hour. Okay, we go through again the module, we review the module, we answer any and all questions on the module. And as Brian said, listen, I stay, as long as there's somebody in the room with a question, that I will stay on there. I've been on there for an hour and a half. Sometimes it's an hour and 5 minutes. Sometimes it's an hour and a half. So roughly that's the window. But again, I would call it an hour, because if you don't want to stick around just for some random questions late, that's going to be up to you. But I would say an hour to an hour and 10 or 15 minutes.
All right. Fantastic. Well, Jim, I don't see any additional questions from the people in the chat, but if there's something, you've been doing this course a long time, Jim, if there's something else that you wanted to just talk about and mention, feel free. Other than that, I'm going to pass it over to you, so that way you could wrap things up and get everybody pumped up and ready for the course.
Great. Well, thank you so much, Brian, for helping out. And I just wanted to let you guys know that I look forward to working with you. If you're still here, if you're considering taking the course, just, one thing, remember, if you don't like it, we'll give you your money back. That's number one. But number two, I believe you will. And I especially believe that, what I get afraid of is, a couple of questions came in. We talk about selling calls, buying protective puts. If you're new to options, please don't let that deter you. Don't let that be the reason you don't take the course. In fact, I think that's the reason you should take it. We start with a very basic foundation to show you exactly how to employ two very basic strategies, that are very important to building and managing your portfolio. In fact, I like the fact that people come in without any knowledge about options, because it allows me to build that basic foundation when I'm teaching you how to do it. And for those who do have experience with options, then you're going to understand exactly what our goals are as well. So don't let that stop you. But either way, I hope that you jump in and take the course. I look forward to working with you. If you can't make it this time, I hope to see you next time. So on behalf of Brian, myself, and VectorVest here, thank you for taking the time, and I look forward to working with you. Bye for now.